Hello and welcome back to my 10 favorite people. Hope you're doing well. I know there's a lot of excitement surrounding the ETF inflows that we've seen over the past 2 weeks or so, but a dangerous trend I'm seeing now is a lot of investors are assuming that these ETF inflows will continue at this same pace over the next few weeks or next few months, which is something that isn't guaranteed whatsoever, no matter how bad we want it to be. And anybody that has followed Bitcoin for a while has seen this trend over and over again. Let's not forget in February of 2021, when Tesla bought Bitcoin for the first time, almost out of nowhere, all of a sudden the narrative was this is just the beginning. Bitcoin is now a corporate balance sheet asset. All these other companies are going to put Bitcoin on their balance sheet. 100K Bitcoin, here we come. Throw on the laser eyes. Tesla just paved the way. Other companies are going to do this and we're going to go so much higher. And what ended up happening in reality, nobody really followed Tesla in terms of the major S&P 500 companies, and we entered a distribution phase 2 weeks later. And let's remind ourselves what happened in September of 2021 when El Salvador bought Bitcoin for the first time, which almost kind of was out of nowhere as well. It was incredibly exciting. And was it a big event just like Tesla buying? Of course. But what became the narrative at the time? This is just the beginning. Every South American country is now going to buy Bitcoin. Bitcoin just became a global reserve asset. Countries and central banks now have to put it on their balance sheet. 100K, here we come. This just changed the game. But what ended up happening once again, just like what happened with Tesla, nobody really followed El Salvador's footsteps, and we ended up making an assumption with a narrative that ended up not being true, and 2 weeks later, we entered a distribution phase. And that brings us to today. Of course, I'm sure you can guess what the current narrative is. We saw some very solid ETF inflows recently, and of course, that's incredibly bullish, and that's why we've gone up over the past 2 weeks or so. But the assumption being made now is that if these inflows continue at this rate for the next few weeks or next few months, Bitcoin is going to teleport higher because the supply is not available to meet all of those needs for these ETF inflows, which means 100K, here we come, new all-time high before the halving, because these ETFs are going to continue to take in all of this Bitcoin. And of course, that is possible, but assuming that it's going to happen is the same mistake we've made in these previous rallies. And of course, that's why it's so important to monitor these inflows. If they continue, great, I would love to see it. But assuming what's going to happen over the next few weeks or months because of a couple days worth of data is very dangerous in my opinion. And of course, I was definitely expecting this correction to take longer. I was not expecting these inflows to come in so aggressively, so quickly. But it doesn't change the fact that this is a very aggressive move that we've seen recently, and it would make a lot of sense for Bitcoin to cool off a little bit, especially because there's so much FOMO right now. And I don't put this FOMO cycle on here because I think we have to go down when everybody gets excited. It's just a great reminder to me as to what the current sentiment is, what the current narrative is. Is there fear right now, or is there extreme greed? And what could the market be missing? And in this case, what would happen if we saw ETF inflows slow down next week after the market made all of these assumptions and rallied so much higher in such a very brief period of time, trying to front run those inflows? Price action also makes it incredibly difficult to manage emotions. When I first started following Bitcoin, price action tended to be a lot more straightforward. You'd see lower highs and lower lows during corrections. Same thing in 2019. But then what started happening after 2020 is distributions started looking very, very different. And instead of putting in lower highs and lower lows, Bitcoin would start sweeping the highs during distributions, and that would lead FOMO to come back in over and over again until price finally rolled over. Same thing in 2021, put in a high when the futures ETF goes live, sell off, go up and take out the high. Everybody gets euphoric, everybody gets excited on the breakout, and then it ends up falling back below the range once again. And of course, we saw the same thing in 2020. We put in a high, came down, took out the high. Oh my goodness, Luna is buying Bitcoin. They're going to buy 10 billion. We're going to front run it. We're going to new all-time highs. And of course, it ends up being a swing high once again, and everybody gets caught FOMOing in to that move. Now, does this mean that things have to play out this way and Bitcoin has to fall back below the range? Definitely not. And I'm definitely not selling all of my Bitcoin here or trying to short the market, but it is something I'm going to be watching for very closely alongside the ETF inflows for this week and alongside the S&P 500, which has gone weeks and weeks and weeks without any type of serious correction. And when you combine an overly optimistic market with maybe a correction from the S&P 500 and a slowdown in inflows, that could really break the narrative that everybody is clinging to right now about these inflows staying elevated for the next few months. So we'll see what happens. For now, the strategy and portfolio remain the same. Still not touching the cash that I have on the sidelines. And if Bitcoin continues to go up because these ETF inflows decide to continue at this steady rate, that's amazing. The assets that I hold will most likely go up. But if this does end up being history repeating all over again and everybody got overly optimistic and started making assumptions that ended up not being true, I'll be happy that I had this cash position so I can reaccumulate at lower prices. I'm still on the fence buying altcoin exposure where Bitcoin currently is. Maybe if we see a flush this week, I'll start buying some altcoins. Not going to do anything crazy. Maybe I will just put in 5% of my cash at a time and kind of take my time with it. Haven't decided that yet, but I feel very comfortable in my current position. In previous cycles, I would have felt completely underexposed by having any cash and not being 100% in the market at all times. But I've noticed that it's so much easier to manage emotions and it's so much easier to make good decisions if you have some cash to take advantage of opportunities and you're not glued to the screen praying that the assets that you hold do not go down because you don't have any cash to buy more. But of course, ETF inflows is going to be the thing to monitor this week to see if that narrative is really going to hold on or if we got overly excited. And of course, we will still monitor the S&P 500 to see if we're going to get that seasonal election year correction that the S&P 500 normally sees in late February and in March. Bitcoin has been going up alongside the S&P 500, so I would assume the S&P 500 would need to remain strong if Bitcoin is going to continue alongside it. And of course, we're getting closer and closer to the February monthly close where we're going to see if Bitcoin will be able to close above its 618 Fibonacci retracement for the very first time before a halving, or if this is going to end up being a wick and we're going to close below it. We're not going to know that until February is over, which is quite a ways away, but it is trading above the 618 Fibonacci retracement for now, and we're going to have to wait and see if that actually continues. As for macro, we still have the first rate cut expected in June, which gives risk assets some room because we know that the recession historically has always come after the first rate cut. And of course, the rate cut could come sooner. It's going to depend on the economy and on the data. But as of right now, with the unemployment rate remaining low, with inflation remaining stubborn, it doesn't feel like there's going to be rate cuts anytime soon. And we do know that historically, Bitcoin has done well during the Fed pause. We've seen that same trend continue, but I do think there will be shakeouts and good buying opportunities in 2024. And I don't think it's going to be up only for the entire year like we've seen so far in the first month and a half. And it is nice to see Ethereum finally showing some signs of life and finally getting above its 0.5 Fibonacci retracement. Again, not going to jump to any conclusions until we see the weekly close, but last week did end up having a very strong candle with very minimal wicks and closed right at resistance. So we'll see how this week ends up playing out. And Solana has kind of been underwhelming recently, but again, it kind of front ran all of its gains in the beginning of this rally and has been consolidating since. but it's nice that it's still trading above its 382 Fibonacci retracement. And we kind of have this nice equilibrium where Bitcoin is above its 618, Ethereum is above its zero point 0.5, and Solana is slightly above its 0.32, because we'd expect assets that are further out on the risk curve to take longer to get back to their previous all-time highs than assets that are a little bit lower on the risk curve. And of course, we'd expect Bitcoin to rally first and reclaim its previous all-time high first, because it's considered the lowest risk of the assets in this asset class. So anyway, we'll see what happens. I know the FOMO and the excitement is strong, and I know it can be painful holding any cash or even being sidelined. But again, if this is the massive bull market that everybody is talking about, where the ETF inflows continue for months and months, there's going to be endless opportunities, and we're going to have plenty of time to take advantage of the opportunities in front of us, as long as we keep our emotions under control, because that's something I wish I did in previous cycles. And it's a lot easier for me now after I've seen how much simpler it can be if you just have a longer term strategy and a portfolio that does well in multiple scenarios, and you increase risk slowly as it makes more and more sense, and as you get more and more confirmation that this is in fact different this time, and we are going to see this huge rally before the halving instead of after the halving like we've seen in previous cycles. So anyway, we'll see what happens. Let me know what you think. Are the ETF assumptions overly optimistic, or will they in fact continue and Bitcoin will continue in the short to medium term? For me, I wouldn't be surprised if we saw a local top here. One squeeze higher is not out of the question either. Very hard to predict what's going to happen on the super low time frames, but I don't think anything crazy is going to happen in the short term, and I would like to see some consolidation before the next move higher if it's going to be sustainable. But anyway, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.